Welcome back to the Bitcoin Layer. I'm Nick Bhatia. Today, we welcome back Matt Pines. He has newly joined the Bitcoin Policy Institute. Matt, great to see you. Welcome back.
It's great to see you again, and congratulations on your to be published book. I really look forward to reading it.
Thank you so much. Excited to get it out to everybody next week. So, Matt, let's start with your new role at the Bitcoin Policy Institute. Everybody is talking about the strategic reserve. I put out a video yesterday basically telling people that the working group has a 6-month time frame to submit ideas. We're going to see a lot of headlines, a lot of chop, maybe volatility around the price. That's my general take. Take it from there, explain to people what they should be looking for the entire year, not just for next week or any short-term time horizon for Bitcoin and the federal government.
Yes, I would say policy and politics never goes in a straight line, and it's not a deterministic process. Policy, is set by the White House, right? When it comes to the overall direction of travel, with David Sachs, obviously, and Bo Hines kind of leading more the operational activities. But the overall strategy was set by that executive order. And that gave a clear set of marching instructions to the executive branch to take a close look at existing regulations, as well as to chart the path for pro-Bitcoin policy, pro-digital asset policy in the course of the administration, set out a number of these timelines and mechanisms to report back to the president with definitive recommendations of the president's working group on digital assets by July 22nd. That was what was, kind of the markers laid down when that EO was signed. But as I mentioned, like, politics is not a deterministic process. Things happen, things can evolve over time, and I think we've seen some potential changes to that. That might have brought forward some of the, maybe not the final decisions, but potentially some more definition around how the White House is interpreting something like a stockpile, or now with the president's language in that tweet, a crypto strategic reserve, and what that will entail. So I think everyone is waiting on bated breath to see what more details will be provided by the White House this Friday. I think that will be a very important event. I think it is more important event than it was originally designed to be. I think potentially, right? The White House has trying to consider how to bring a wide range of perspectives from across the industry, while also giving time for the internal bureaucracies to get staffed up to understand the implications to make good on the president's executive order. And so those are like different sorts of things, and they're trying to be balanced. And I think folks like Bo and Sachs are trying to do their best to balance all those different interests and objectives. But I think I was just looking at the latest updates about this Friday's summit, which is going to bring both the members of the president's working group, like the executive branch officials, right, Lutnick, Bessent, et cetera, obviously with Bo and Sachs, to articulate what the administration's potential policies or views are, to sort of move the ball forward on the executive order, while also bringing in the industry that were originally supposed to be more of like a kind of listening session. So it might be more than that now. It might be more of a definitive set of announcements. It remains to be seen. I think a lot potentially is in flux. So I would say the timeline might have been pulled forward, but I don't have like 100% confidence on that.
Join me for a free online event on Monday, March 17th at 11 a.m. Central. The event is titled Death, Taxes, and 21 Million. Protect your generational wealth before time runs out. Discover why Bitcoin is the ultimate scarce asset and why protecting your share of 21 million through tax strategies and careful inheritance planning is so important. We'll talk about why Bitcoin's 21 million brings certainty to an uncertain world. And with April 15th fast approaching, we'll go through those tax strategies and what IRA products you have access to with Unchained. Discover inheritance solutions like trust vaults and multi-sig. And also, if you have an advisor like a CFP or an attorney, make sure to invite them along so they can learn about tax strategies for Bitcoin with you. Go to unchained.com/TBL for all the information. Now, let's hit the most controversial topic first, which is the shitcoinery but more specifically, the inclusion of a made in USA crypto agenda. Do you think that it's relevant, Matt? So I know that Bitcoin people like you and me don't think that that's a good idea. I understand that. But do you think that it will get in the way? And do you think I mean, we've talked to Zell about, some of the Ripple lobby efforts specifically and how that's dangerous. So give us context. Is it going to get in the way? Is it something that we should be furious about? Or should we just hope that it plays itself out as more opinions get involved? How should we go about this crypto aspect of the reserve?
I guess I'll give you my my normative and my descriptive takes, right? So my normative take is what I believe is right policy, what is good policy, and then my descriptive take is what is my assessment of the current state of play, right? Just sort of an honest evaluation of the current structure of the relevant power, right? Maybe I'll start with the latter, right? I think it is clear, right, from the president's tweet that he is listening to, and those voices have a lot of weight, at least on that basis. In terms of how he thinks about a sort of multi-coin, view of the strategic reserve that is sort of seems to be implicitly weighted towards the largest sort of capitalized coins that happen to have some association with the U.S. Now, those criteria have not been actually elucidated in the tweet nor in any other official or unofficial description. So I think we're interpreting what the rationale was that underlined that announcement. I think one thing to look forward in this upcoming March 7th summit is a clear articulation of what those criteria are or may be, because that was an explicit requirement of the EO to the presidential working group, was to define what are the criteria that should be used to justify inclusion in the strategic national digital asset stockpile. And so that is a ongoing political dynamic. And I would just say that in DC, right, the crypto policy industrial complex is heavily weighted to, as a function of dollars, to the crypto asset industry. Like Bitcoin policy, Bitcoin focused advocacy and engagement is a tiny percentage. I would say less than 10% of the overall sort of ecosystem. And I think that's what you get, right? Like DC is not like the DC policy ecosystem towards digital assets is not market weighted to Bitcoin's proportion of the total value of digital assets. In fact, it's the inverse. And so, like, hopefully, BPI exists to help tip the balance in maybe more of a market weighted direction in terms of the voice of Bitcoin and Bitcoiners, which is fundamentally a leaderless organization. There's no Bitcoin CEO that could just represent Bitcoin and the broad Bitcoin industry in these sorts of political processes. So that's one of the main missions and objectives of BPI. But I think we're trying to play catch up to a certain extent, right? The larger crypto industry has just been much more well-resourced when it comes to that sort of policy. So I guess I'm not surprised that this is the outcome, just because if you were to look at where is the sort of the distribution of political influence, and you just look at what you would expect, that's going to be the outcome. Now, as a matter of sort of policy, right, as a matter of what is good, what's I think more justifiable, I think it's very clear that if you were to write down clear objective criteria of what sorts of digital assets are credible enough to put into a strategic national reserve, is that Bitcoin is the only one by a mile that can satisfy those criteria. So I think it's important we write down those criteria. I think they're pretty obvious to Bitcoiners. But there's also, I think, unanticipated or maybe maybe not obvious risks associated with like a multi-coin portfolio if you're going to go down that route. Just from the sense that like most people would think about a diversification basket as providing diversification benefit. But as most folks that track the crypto industry know, that like most other crypto assets are highly correlated to Bitcoin's performance, and usually to the downside react much more and tend not to recover on a structural basis. So like the diversification benefit, even if you're just thinking about it in terms of monetary returns, doesn't actually get you what you think you would get. It's like mixing in tin and aluminum with gold into a diversified commodity basket. If you're trying to hedge against long-term inflation, like those are going to underperform potentially dramatically. So you don't actually get whatever benefit you thought. So it's unclear what the motivations are to kind of think about a multi-coin strategic reserve. There's many, I think, ethical reasons, practical reasons, financial reasons not to do it, and I think those will come to the fore in time. It's about laying out good arguments, and I think hopefully if we have a good policy process, I think it'll be very clear what the sensible outcome is.
And I'll lay out a couple of the policy or how I can add to the conversation and why I think it's sensible, as you described, to only include Bitcoin. One of the criteria should be this protection against the idea that insiders always dump.
Mm-hmm.
And so if you can map out a path to an insider creating and or dumping the coin onto the market or to the US government itself when the government is creating that stockpile, then that should be a red flag, and that should potentially disallow whatever that coin is.
You want it to be sufficiently decentralized, so there's no insiders that can manipulate the supply or can pump and dump. You want it to be a proven asset, so it's got to be secure. It has to have proven itself in the real world over a long period of time. You want to have certainty that the supply and the protocol is fixed, right? That there isn't going to be a change by some small group of either the foundation or the developers that fundamentally introduce new risk or changes to the nature of the protocol. And all of that contributes to it being fundamentally a neutral asset, right? That the government fundamentally isn't picking a winner, and that the asset itself has the functions of a synthetic commodity that can functionally effectively as digital gold, right? To sort of play that diversification benefit that we would want in a strategic national digital asset stockpile as a complement to our gold reserves, but for a digital age. And so I think any deviation from those principles or inclusion of alternative crypto assets just introduces additional risks and fundamentally undermines the basic premise of having such a reserve in the first place. And
honestly, Matt, you described three things there. One is the insider concept. The third one was this, limit on supply or the prevention from any one foundation or actor. But those are actually the same thing. And I would argue that the second point, which is that it should be proven, we can even simplify it more. So I'm not trying to critique your outlay of the policies, but to simplify it for people, if you just think about the insider test, that should be enough to get the whole conversation steered in the correct direction. And that's the point I'm trying to make. Obviously, Bitcoin is going to be a more proven asset, but there are going to be assets that will qualify for being quote unquote proven just because they have a certain threshold of market cap. That, oh, look at the market cap. It's the size of an S&P 500 company. It's proven. And so proven isn't enough. It's got to pass that insider test, and that's how we should it's one of the ways we should help differentiate Bitcoin when we're in this conversation with policymakers. I would suggest. So what's going to be the summit? What are your predictions out of this summit? Do you think it's a big deal or just another one of these headline waves that we're going to ride all the way until the working group is done?
I'm updating my priors pretty much daily, and I think the Sunday morning tweet from Trump had a significant effect on my priors in terms of the time horizon to expect some significant policy announcement. I'm no longer waiting to July 22nd to get clarity on what I think the government's position is going to be on this. I don't expect it's going to be the final word this week, but I'm expecting something much more definitive or specific to come out of this working group gathering with the industry representatives there. I think it's still kind of a work in progress, to be honest, because I think there was a bit of a, okay, how do we coordinate across all these different parts and pieces of the bureaucracy, some of whom just got into the office. But now that the president has made a pretty clear statement of his policy priorities, how do we operationalize that, right? How do we implement that effectively? How do we ensure that there is, a process that this goes through to implement it and sort of, to steer this forward? So I don't think the cake is fully baked. but I think it's in the mold, right? And so I'm my time frames for thinking about something coming out more specific has certainly accelerated. Now, I don't know what the content of the announcement will be. I think it's probably being discussed as we speak. I think David Sachs has articulated certain things it won't be. He said it won't be an acquisition or essentially a tax and spending program. But other than that, I don't think we have much to go on. So I will be very curious. I'll be watching and listening intently.
And are you advocating for the active purchasing of Bitcoin going forward for the government, or are we trying to focus on the step one, which is form a strategic stockpile? We know the government already owns it, so put it in a formal stockpile and point to it as a strategic reserve, and outline why the government now holds Bitcoin strategically. That would be the first step. Second step might be to purchase it going forward. Do you think that second step is important? What is your take on that?
Yes, I think on a structural basis, long-term basis, the U.S. government should hold at least a similar proportion of digital gold as it holds of gold, right? Again, the path to get there should be prudent, should be deliberate, shouldn't just be a YOLO. But I think it's a matter of strategic positioning for a fundamentally different evolution of the global monetary and technological system that the U.S. government has to, make those policy changes now, because the government moves like a cruise ship, right? These things don't change overnight, and geopolitics and the global economic and monetary system can. They're subject to lots of unanticipated tail risks and disruptions. And the government exists essentially to hedge the citizenry against those future changes, right? It can make decisions in the long-term national interest that no individual company or portfolio really can. And so the government has an obligation to its people to ensure it's resilient against a wide range of different futures, and is putting in place policies today at a relatively low cost that have an asymmetric upside in terms of strategic resilience. So I am for the government acquiring a significant position in Bitcoin in a deliberate fashion over the long term. And I think it should be done ideally in legislation, but executive action can help provide the political capital and urgency to legislative action to help ensure this gets across the finish line in a political calendar that's relatively tight in the next 12 to 18 months. So that is certainly a policy view of myself and BPI. But of course, we're not beholden to a particular implementation of that policy view. I think there's lots of ways to do it, sound, prudent ways to do it, and that's why you want to do it in a deliberative fashion. You want to bring all the relevant folks from across the Treasury, from the Defense Department, from the Department of State, from the Department of Energy, that folks that have some equity or an interest in Bitcoin, especially as it becomes a geopolitically relevant asset, as it becomes an asset that's relevant to our energy system, as it becomes an asset that's relevant to our financial technology and our global position. This isn't, just a sort of a niche topic that is just relevant inside the sort of crypto policy world. This is already touching and will continue to touch all these other strategic elements of our government. And I think all of those elements need to have good informed views to drive kind of, coherent national policy.
That was an amazing answer, and I'm going to make you repeat some of it because you put so many things in there that we have to separate out. Okay. The first one is I'm going to ask you a question to just pull out some of what you said again, which is, why is it strategic for the United States to own Bitcoin? You mentioned that the government is there to hedge the citizenry against long-term changes, and that the government is there to provide strategic resilience for the citizenry. So can you, as simply as you can, state why the US government needs Bitcoin? Why is it strategic for the government to have Bitcoin over the long term? It's obviously because the world is changing, Matt, right? That's what we're talking about. It's technologically changing. So can you outline that strategic importance?
Yeah, so I spent many years asking and answering what if questions for the government, fundamentally thinking around 5, 10, 15-year long range forecasting, right? Where you're considering potential disruptions, potential technology change, potential geopolitical conflicts, which right now, or the time you're asking the question, are usually considered far outside the realm of the possible or the plausible. There's sort of the 1% downside scenario, the risks, and the government, for many years has had to, this is the one function of the government that really nobody else can perform, which is to think on a decade generational basis. The government is an institution that wants to survive indefinitely. Businesses come and go, corporations come and go, even cities sometimes go through dramatic economic disruption. But countries, they want to survive forever, right? That's their ambition. So countries have an extreme long time horizon. So when countries think about planning and think about what are the major risks that undermine their fundamental national and strategic position, and those are questions that most other individuals don't have to ask. And so this what if question is now a critical question about the future geoeconomic and monetary system, right? Nobody expects it to just dramatically change on a year-over-year basis, but a 5, 10, 20-year basis, especially in an era of accelerating technological change where digital disruptions become geopolitical disruptions very quickly. The global monetary system that was designed, in the 20th century is going to be disrupted, right? That's just as everyone expects that. The question is, are those disruptions going to be things that we prepare for and that we're positioned ahead of and to sort of leverage for our own future strategic advantage, or do our rivals get the jump on us? So that's like the basic predicate that any national leader that's being responsible has to address. So a basic what if question that is no longer like a theoretical question is, what if Bitcoin were to monetize to reach some meaningful fraction of gold, or even reaches parity with gold, or even exceeds the total value of gold as a reserve asset in the world? This is not an implausible scenario in the next 5 or 10 or 15 years. And so now that that's a not implausible question, the government has to answer it, right? So what is the downside risk to the US of that happening in a fashion where that monetization is driven by adoption and acquisition by US rivals or middle balancing powers, right? To hedge against a potential degradation or contraction of the legacy treasury dollar standard. Okay, maybe not your baseline scenario, but it's not something you can rule out. In that sort of scenario, it'd be very bad for the U.S. if the global monetization of Bitcoin as a neutral reserve asset was being led by our rivals. And so, okay, your question is, so how do we position the U.S. in a way that we get the benefit from that, right? So how do we hedge that potential scenario, right? These are distributions of scenarios where Bitcoin's monetization could happen in a number of different path-dependent ways. And the job of good national policy is to sort of steer, right, the global system and U.S. interests in a way that maximize our position. I think that's just a question that hasn't really been asked before until very recently. And you don't want to get surprised. You don't want to have yourself wake up in 4 or 8 years in a new presidential election cycle and realize that actually the ground underneath your feet has shifted. And I think we're seeing a lot of change coming both from the US, a lot of major strategic shifts underway that have a core monetary and geoeconomic component to them. So I think everyone has to sort of take a fresh look at the status quo and say, this is probably not going to continue. Things are going to change. And Bitcoin is now part of that conversation. And so I think the question is, how do we align Bitcoin in a positive fashion to our values, to our security interests, to our geoeconomic interests? And I think that's basically my whole bit, right? Is to sort of push Bitcoin into that conversation and make the case that, one, Bitcoin aligns with our values, right, versus our rivals' values, which is fundamentally authoritarian, closed, digital dystopias where everyone is tracked and the money can be turned off with a switch. It's fundamentally aligned with an open, competitive, free market system where folks can hold their own wealth, can transact peer-to-peer, and can't easily have their wealth stolen or seized from them. But it also, as a hard asset, aligns with a world system that's fundamentally, as you know, like burdened with a lot of debt. And the typical way that every sovereign ultimately finds themselves out of that pinch is through a combination of capital controls, financial repression, devaluations, and those usually lead to people fleeing to hard assets. And if most of those hard assets are held by your rivals or systems of capital and power that are outside your jurisdiction, then you're gonna lose on a strategic basis. So this is a big inflection point, or you might call it a phase transition in the global economic and monetary system. And Bitcoin is now going to play a role. And so we have to be smart about it and position ourselves as individuals, as companies, as countries to come out the other side of that transition in a better spot.
I think you just pointed out something so important that changes the way that I'm going to phrase it going forward, which is that it's not strategically important for the US to stockpile Bitcoin because the monetary system is going to a Bitcoin based one. It's actually that if Bitcoin's market value exceeds gold's, then it is the global reserve asset. It becomes the global neutral reserve asset. And in that world, you better have some. So it's not like the way that I was thinking about it is that you skate to where the puck is going for the system, but actually it's a hedge for what governs us at the Bitcoin layer, which is price is truth. And if the price does get there, you better have some strategically. So would you agree with that? You've kind of set off a light bulb there for me.
Yes, I mean, I did a lot of like worst case scenario planning for the government, which is nuclear war, pandemic, cyber attacks, and the government has to like position itself to invest in resilience against these scenarios. And the benefit of Bitcoin is they can invest in resilience that also provides as like an insurance payout, like much larger asymmetric upside, right? So the government is fundamentally provides strategic insurance to its population and to its economic system. And changes happen, right? The world isn't static. And we can just look at history and see how sometimes these systems can shift abruptly. And usually they're engineered by the dominant power in a way that's favorable to themselves. And that's the story of the US, right, since the 30s, right? But I think we are now recognizing that the world system is fundamentally rebalancing. The structure of power isn't as unipolar as it was. And so if we go through a reordering or a restructuring of the global system, we're fundamentally not going to have as much hegemonic dominance in imposing a new system or the existing system on its global participants that we successfully were able to do in the Bretton Woods and the Nixon shock and the Plaza Accords and these various other monetary and geoeconomic rearrangements where we had to, get the powers to be at the table, and we were the guys that could kind of call the shots. And I think we all recognize that the world system is fundamentally more multipolar. And in that world system, if there is a restructuring or reconfiguration or a conflict, we have a lot of residual power, but we also have a lot of increasing strategic vulnerabilities, right? The treasury market is now a source of strategic vulnerability, as we've seen with its many manic episodes where it freezes up and the Fed has to step in with trillions of dollars of QE. And they have to sort of duct tape through various repo facilities and liquidity facilities to keep the domestic banking system solvent. So these are symptoms of a real structural vulnerability, right? And Ray Dalio has pointed out this. This is why there's such urgency to try to induce some fiscal sanity. And we can get into the mechanics of why that might be difficult, right? And so we're in not like an easy spot where the status quo could just be assumed to continue indefinitely, and you can just rely on the inevitable endurance of the treasury dollar standard, becoming, or just sort of becoming the same thing it has been in the next 5 or 10 or 20 years. And so you have to think about what could change, like what potential changes could be on the horizon, what could be new risks that emerge, and how to hedge those against in the present.
And so hopefully people can see with this outline that the strategic position in Bitcoin for the US government is essential today if there's even a smaller chance that Bitcoin does arrive there. So it has to position itself, or like you say, it has to provide resilience for the citizenry itself, and Bitcoin will be part of that equation over the long term. I want to add, go
This
ahead.
is also an important feature of sometimes, argue that an SBR is just pumping Bitcoiners' bags. This is using the public purse to enrich private individuals. And yes, a collateral impact of the US government adopting a pro-Bitcoin stance and acquiring Bitcoin will be current holders of Bitcoin see the value of their holdings go up. That's just like a mechanical expectation. But the reason the government needs to do this is to ensure that everyone in the US, right, has that strategic resilience, right? Nobody else, no other institution can provide that to others, right? Like anyone can just buy Bitcoin for themselves and insure themselves, right? But this is about the strategic resilience on behalf of the common weal. And that is why we have public policy, is to ensure our common collective resilience against future change. And so you want the government to adopt good policies that ensure that everyone is insured against these changes, and not just the select few who are, in early or can sort of get access to these products or have this disposable income to save into a hard asset. Most people don't. And when you get these geoeconomic resets, typically the folks that don't have savings, or the folks that have a lot of savings tied up in treasury bonds, they tend to get hosed, right? Usually retail and savers, retirees tend to lose. They tend to eat it in the teeth, right? And I think it's important for the government, essentially, is why you have, this is like the socialist argument or the collectivist argument for Bitcoin Reserve, is that, you ensure that everyone that maybe right now doesn't have the wherewithal or knowledge to, or the ability to acquire Bitcoin to insure themselves, the government can provide some measure of protection on their behalf into the future.
It actually, potentially funds Social Security from a theoretical perspective, even if the mechanics of that might be decades away. Something like that sort of thing, where you connect an asset today to a liability tomorrow. That's what finance is, and so Bitcoin can fit a role there. I don't necessarily need to go too deeply into this, but the difference between executive order and a legislated strategic Bitcoin reserve, you point out that it should be legislated. That's the better path forward, but it might not be. So can you give us maybe the bottom line there, your expectation and your recommendation there?
So my recommendation is both and, right? I think the executive has the power within certain limits to create a strategic Bitcoin reserve. It can locate that within the president's legal authorities in the Exchange Stabilization Fund, and can use essentially couch cushion money that's already in the Exchange Stabilization Fund. That doesn't require the issuance of new debt, doesn't require the transfer or expenditure of taxpayer funds. Essentially, surplus in the Exchange Stabilization Fund could be used to acquire a decent starter position in Bitcoin. Now, it wouldn't provide the sort of long-term strategic resilience that we're talking about on its own, but it would provide a critical sort of seed, a core anchor, and provide the political signaling and oomph to get the legislation to sort of formalize it and codify it. And so we've written kind of draft executive orders that describe, exactly how that could be executed within the existing legal authorities. The Gold Reserve Act, for example, could be used. And so it's a very practical thing that could be done. Wouldn't require, much, other than review by some White House lawyers and then a signature. And that would be, a good way to start. And then would then sort of kick the ball over to Congress. And I think Senator Lummis, she is very focused on this. She's the chair of the Digital Asset Subcommittee, and she's in active dialogue with her colleagues to get bipartisan support for this piece of legislation. And I think that's not entirely ruled out. So hopefully we'll see some potential movement on that over the course of the spring and the summer. These sorts of conversations happen like one-on-one, from the principal to the principal, and then staffer to staffer. They understand what the bill is, why it's important, how it actually fits with their views of the national interest and their personal obligations to their constituents. So this is how politics, right, works. And I wouldn't handicap it right now, because I think, as I mentioned at the start, like politics is a nonlinear thing. It looks like no progress is being made at all. A lot of quiet conversations are happening. People are kind of getting more comfortable. They understand it. Their objections are addressed. And what looks like no progress or no co-sponsors or very little support can very quickly turn into broad-based support. But it requires work. It requires active engagement, education. I think a lot of folks across the Hill are now really interested in that, right? What's the major inflection point that has changed with the new administration, the new Congress, is there are dozens of offices, dozens of staffers that now have to get smart on this stuff. Maybe they could they weren't on these committees, they could kind of safely ignore it. But now it's clear the White House is set, right? This is as a priority for themselves. There's new subcommittees stood up. This is going to be a legislative priority. So a lot of people have to get smart, have to form an opinion that they haven't had to form before. And that's one of BPI's main functions, is to help, educate, provide rigorous analysis, right? Provide those white papers, right? Provide thought leadership and expertise to help them understand the ins and outs and why Bitcoin is different. So we're going to be focused on that. Hopefully we'll be successful, but DC is DC.
And you bring up a good point about the purchasing of Bitcoin going forward and the treasury, the total debt as well as the deficit situation. Those two things are related because, meaning you brought up the exchange stabilization fund. That's a little piggy bank that doesn't have to bring in tax revenue. It can, like you said, get a starter position going. But if you want a bigger position, you have to bring in revenue. Now, when your expenses are more than revenue, you're so meaning you're in deficit and you're buying Bitcoin, it means you're adding net to the deficit there already. So the deficit steals money from the future. And if you're buying Bitcoin with deficit money, you're adding to that, and you would have to make you'll have to make its own political argument for doing that in deficit times versus doing it in a surplus time. Now we know we haven't had a surplus in 30 years here, so that's not really part of the equation today. I say all that to say I would love to do a whole what if episode with you where I'm challenging you on each portion of the government spending and playing devil's advocate that yes, maybe they can cut it. And that maybe Bitcoin will start with the premise that the only way to justify to the nation that we should be buying Bitcoin actively is to actually reverse the deficit into a surplus. So find out a way to bring revenue and expenses in line. What a challenge that seems insurmountable to any of us. But playing a whole devil's advocate because you have such expertise on different parts of the government that I'd love to do. Just let's go into Medicare, let's go into Social Security, let's go into defense, let's go into other line items, do our own little Doge overview. I know you're saying it might not be possible, but I would love to just push back and see where we can find it.
I mean, bracketing off those like strategic kind of reset the balance sheet of the government questions, which that's a much larger conversations. Mechanically, the Bitcoin Act, the Lummis bill, and I think its future evolution relies not on new debt issuance, but on a particular trick, you could call it, right, of revaluing the gold certificates that are currently marked at $42.22 an ounce, instructing the Fed to remark those at, say, market value, and then credit, issue new certificates, and then credit the Treasury General account with the proceeds at the sort of their present value, which would potentially flush the TGA with up to $800 $1 trillion of new reserves, right? So this is in a sense like a Treasury to Fed ordered, called a gilded QE, where essentially the undervalued assets are being remarked up, are these gold certificates, and those are then leading to the generation of new reserves that are now in the TGA. And then those can be used to fund a variety of different government purchases, which would inject those reserves into the banking system and whoever is selling those assets. So if the government was using a portion of this $800 billion new reserves to buy Bitcoin, those reserves would go into the banking system. George Selgin has an argument that those new reserves in the banking system would lead to an increase in IOER that the Fed has to pay. So essentially this could potentially, ultimately this gets paid by the Fed in terms of their operating margin over the long term. They currently already have like a massive, unrealized loss because of their SOMA portfolio. So there's like lots of sort of technical details associated with that. But the upshot is the government could buy Bitcoin without issuing new debt through the revaluation of gold certificates. And in particular, Zoltan Pozsar has argued recently that part of the larger geoeconomic monetary reordering and potential play that Besant is trying to engineer will rely on in some component a revaluation of our gold certificates and potentially a series of strategic swaps with our geoeconomic allies that we're sort of trying to lock into a tech trade and security zone. And a key mechanism will be the revaluation of gold. However, if you look at history, any such revaluations have always required legislation. And there is currently no bill, no package, no product, no vehicle that gives the Treasury Secretary the authority to do that gold certificate revaluation, except for the Bitcoin Act. So I can imagine a scenario where there's a convergence of interest between the pro-Bitcoin folks that want to get an SBR, and that a portion of this maneuver is used to sort of capitalize that initial Bitcoin reserve, but the majority of it goes into this larger play, which could also be used to help capitalize other government initiatives. Now, there's a whole separate talk about a sovereign wealth fund being stood up, where normally you have a sovereign wealth fund, you have surpluses, right? We are a twin deficit country, so you might ask, why do we have a sovereign wealth fund? Well, we have a lot of assets, and of course, Besson has talked about monetizing the asset side of the government's balance sheet, and they're intangible and potentially have a lot of value. Maybe this is where the privatization of Fannie and Freddie come into play. Maybe there's other national assets that could be monetized and then used to capitalize the sovereign wealth fund. Maybe parts of the existing U.S. government holdings of Bitcoin could also be used as seed capital for such a sovereign wealth fund, and it could be deployed into strategic assets as part of a national portfolio, say in reshoring chip fabs, say in domestic energy build out, say in acquiring Bitcoin itself as a portion of that portfolio. So this is thinking about like a 21st century digital dominance, industrial dominance sovereign wealth fund that has seed capital from Bitcoin, is catalyzed by future Bitcoin appreciation. So there's different ways of skinning this cat. One is you could have it like be in the more monetary fiscal side of the government's balance sheet, treasury, et cetera. On the other side is a special purpose vehicle, sovereign wealth fund. I think, or even more creative ideas of like bit bonds, right, where you have essentially a Bitcoin kicker built into new treasury issuance. I think these are all ideas that need to be seriously explored. Be stress tested. You need to have all the different folks inside Treasury, go through and figure out how this could be operationalized. But I think we're in this mode now where we need to put these ideas on the table and seriously address them. I think we're in an environment where lots of things are going to change, and we need to make sure we are creative.
I think that the idea of this marking up gold, I'm highly skeptical that it can happen, but I see the mechanical path to a backdoor QE and injecting a bunch of reserves into the system via the TGA channel, which, for people that don't know, when the Fed is the creator of base money and has reserves and cash as liabilities on their balance sheet. Another line item is the Treasury General Account, the TGA, and that Treasury General Account is the government's checking account. And so the government has reserves that get into the system when the government spends money, and those reserves settle out of the TGA into the banking system. So the TGA then will be the avenue to get reserves into the banking system as the Treasury spends down magically. I say magically because it would be magic to mark those assets up. The reality, though, is that it's based in a market price. So there's a lot of logistical issues there, and I am skeptical that it will happen, but I'm thrilled that it's on the table, or that people are suggesting that it should go onto the table in terms of what we should be talking about. And the whole idea of what Besant even means when he says monetize the asset, we still don't really know. Mm-hmm. He's mentioned that he didn't mean gold in one interview since then, but we really don't know what it even means to stand up a sovereign wealth fund as a non-surplus country. But the idea that it's going to be some sort of digital future. What is the term you used, Pines?
I mean, maybe the digital techno-industrial fund or something.
Yeah,
I don't know. But
to build out all the the technology that we will need for the next century as a nation.
Yeah, and this is the thing is, I think we're in a particular moment. I think the next 12 months will be very important. Sometimes things just happen on a weekend, right? Sometimes you look at Camp David, right? During the Nixon shock, it was a bunch of dudes that got together. They had the debate, and Nixon just goes, "Yep, I'm doing this." Right? And even during the 30s with Roosevelt, right? There was vociferous arguments being made about the calamity that would ensue from a gold or a dollar gold devaluation. And people were like, and Roosevelt was just like, "Yeah, I'm going to do it." Right? And so you tend to look at the history of these monetary resets or these shakeups, and in history, we sort of stitch them together in kind of this coherent narrative where there's a lot of structural kind of logic that drove them. And it was sort of, there must have been a lot of like many months of planning and like all these war games and, well-designed contingency plans. And sometimes there's that, but other times there's just stuff happens. Guys get in a room, they make a decision, they announce the decision, and then the market has to react. And then we're in a different regime. And sometimes those are part of multi-layer geopolitical bargains where you're using a monetary move to get a geopolitical advantage, and the market is just collateral damage. And sometimes what they thought was temporary wasn't so temporary. And then the system just adapts to a new path dependence, and there's a hysteresis that then it unfolds. And history tells us is that those things can happen without warning. So politicians say a lot of things, senior officials say a lot of things. Doesn't mean it's not going to happen.
And that's why we need people involved in this process that know their history. So thank you for, bringing that to the table for us, because the history of Camp David and the Nixon shock just happening as a quick decision, because it wasn't really on the table to just completely close the gold window, from my understanding. And a decision that was made very quickly. And you could imagine a Bitcoin decision being something of urgent strategic importance at a certain point of time. What if the Bitcoin price gaps up from 125 to 200,000 in 3 days? President might get people together and say, we got to figure this out now before the market opens on Monday.
Yes, I remember I even had this exact kind of conversation. One of the first conversations I had with David Zell, who is the co-founder of BPI, when he first approached me, and I was just tweeting about Bitcoin national security to like 300 Twitter followers, and he DM'd me. He's like, hey, you want to write our first white paper on Bitcoin national security? I was like, sure. Like, this seems like a fun thing to do, but I didn't really have any expectation that BPI would become a thing. But then we met for the first time, and I was kind of articulating my rationale for even getting into it. Was like, I was thinking about that scenario exactly of, there's a future where Bitcoin is just running up, it's gapping up, and nobody really knows why, right? People are coming with all sorts of explanations. But the reaction by the White House, right, in that crisis moment, which will be perceived as a crisis for them, is going to be very important, right? You don't want those national security officials to be instructed by a Bitcoin hostile president to be like, make it stop. This is essentially a problem for us. This is, probably at the advantage of some people we don't like. It's potentially inducing more risk or uncertainty in our financial system. Do what you got to do, guys, at the NSA. Make it stop. Do whatever you got to do. Bitcoin, I think, is resilient, but that would not be a good thing, I think, for Bitcoin or Bitcoiners to have happen, especially American Bitcoiners, right? Is to have that sort of scenario where Bitcoin is on this, run, and the White House sees it as a problem or risk to be managed. You want that to be seen as, great, this is what I wanted to happen. This benefits me. This benefits the U.S. This is advantaging us relative to China, relative to the Middle East, relative to our rivals. That's the critical, work that needs to be done before you get to that point. And that makes the world of the difference between how then Bitcoin evolves from this kind of intermezzo period where it is a geopolitical asset, but still very, I would say, globally immature in that sense. It's still entering that sort of initial stage of institutionalization, and sovereign, reserve managers are starting to think about it, and sovereign wealth funds sort of dabbling with it. We're still at this sort of very initial period, right? But then you could get, this is a nonlinear phenomenon that can quickly cascade. And it only is a small number of individuals, senior leaders, kings, crown princes, right, that can just make a decision, and trillions of dollars can flow. And you want national leadership in democracies that we are subject to feel like that's a good thing for us, because we had that position established well in advance. We had good strategies. We had good policies. This is happening because we basically gave it the thumbs up.
I want to ask you about the departments. Each department, you mentioned that there are several departments of the government that have a stake in Bitcoin. The Department of Energy, you mentioned. There are a few more that are involved in the working group. So can you tell me, we have, the Fed is not part of the working group, which is great. And some people are celebrating that even. The Treasury Department is, We understand why the Treasury Department would be involved in a Bitcoin strategic reserve, as Bitcoin is a monetary asset and a monetary phenomenon. But it might, and the Department of Energy even associated with the electricity and power generation aspect of Bitcoin mining and the strategic necessity to support that industry within the United States borders. But what are some of the departments
Mhm.
involved in this decision, and why are they important? What maybe are some of the non-obvious ones?
Yeah, and you can think about, the different aspects of Bitcoin. There's Bitcoin, the network, Bitcoin, the asset, and kind of Bitcoin, you could call like Bitcoin users, like the Bitcoin community, right? And they each potentially have a different interface with different government agencies and their bureaucratic responsibility, right? Like Bitcoin, the asset, is regulated, right, by the CFTC as a commodity. It's trading is subject to that sort of spot market regulation, and so the traditional financial apparatus, regulatory apparatus around regulating a commodity asset like Bitcoin is obviously has an interest, right? Is Bitcoin the network, which is has also kind of bifurcates into two, right? There's the proof of work mechanism, which fundamentally requires large computational energy expenditure, and so that has now had developed into a system with dramatic implications for parts of our energy system, our grid system. And that's rapidly innovating and changing almost on a monthly basis in terms of new use cases, open source mining, residential mining, full stack behind the meter, integrated with AI high performance computing data centers. You've got controllable load applications where it's kind of this demand response, helps kind of smooth out and keeps the grid stable. So the Department of Energy makes policy and helps to drive, our overall energy policy and regulatory system. And so Bitcoin miners are directly exposed to that. So they have to engage. And I think, it's now becoming an important industry, and has to articulate like the business and use cases that it needs to, that don't get in its way. And this Bitcoin, the network, as a global network, a permissionless cross-border peer-to-peer sort of payment system. And that interfaces with other parts of the government that are responsible for law enforcement, financial surveillance, OFAC, the intelligence community, thinking about the global development of financial rails in a geopolitical competition with adversaries that are developing their own alternative digital payments and digital currency systems. And so that's a whole another topic where there's lots of government interest and equity in the development of these technologies, their penetration in different parts of the world, where the on-ramps and off-ramps exist, whether they're in our allied countries or rival countries, how these systems can be abused by our rivals, or how can be used to foster our values. And so that's that goes from DoD to the IC to Department of State, et cetera. So I think we're seeing that now Bitcoin has all these different aspects, and of course the user community, right? Like we want to hold Bitcoin, want it to be protected from government overreach. So we have our civil rights, our democratic voice needs to be represented, and so that's our lawmakers, that's everyone that responds to the political pressure in a democracy. So this is now a fascinating, multifaceted phenomena. It can't just be silent into one. It's just a financial topic, right? It's just a financial asset. You just regulate it, right, and it stays there. No, it's a big a sprawling sort of policy area.
Now, what about the future of productivity in the United States? You mentioned the sovereign wealth fund adding to the technological capabilities of the nation. Obviously, Bitcoin is part of the White House agenda going forward. Where do you see American productivity over the next few years? What's your outlook there? And has it changed at all over the last couple of years?
I mean, there's like an economist answer to this, which is like, okay, the diffusion of new technology is highly heterogeneous, and you have a lot of like Coasian obstructions in terms of the theory of the firm to adopt new technology, and you get kind of a lot of idiosyncratic potential noise in economic measures as a result of a fundamental like new general purpose technology that begins its process of diffusion. So this is like like ask the nerd GPT to give me this answer, but like the left curve is like everyone's going to get a lot more capable of doing a lot more interesting things. And how that shakes out in this highly chaotic global system, I have no predictions, but like everyone is now going to have access to more and more intelligence to do more interesting things. Those could be bad things. Those could be really innovative and productive things. And so I think these sort of capability space for humanity is just going to explode. That's going to inject a lot of uncertainty because some political systems don't like that, right? Some economic systems can't adapt to that. Some businesses can't adapt to that. So there'll be a lot of, I think, disruption, displacement, dislocation, new things that come into existence that quickly explode. Things that we relied on that we assume will always endure go away. So I think productivity, yes, will increase, but that like crude measure in our GDP statistics, I think will be very unhelpful as a guide to what changes are underway.
It's more about the holistic changes. I've completely run out of time. I had so many more questions, but
I've got 5 or 10 more minutes if you want.
All right. Well, let's talk about your event in Washington, D.C. And then I have to sneak in a question from my family at the end.
Yes. So shout out to the great work by the team at Bitcoin Policy Institute, which, by the way, is growing. It's like we are now a 10, 11 person full-time shop. Most of us downtown in DC, got an office here. We're excited to be opening up a more permanent office in partnership with PubKey. So stay tuned for more details on that. I think that'll be a really cool new physical cultural node in DC, the heart of the beast. So stay tuned for that, hopefully over the course of the summer. But as a kind of a coming out party for ourselves, or coming out event, we're organizing a forum called Bitcoin for America on the March 11th at the National Press Club. It's invitation only. So unfortunately, by the time this goes live, I think the window to request invitation will be closed, but it will be live streamed both by Rumble as well as by ourselves. And it will feature kind of industry leaders. We'll have folks from the traditional finance industry, the digital assets industry, as well as policymakers to articulate in like clear terms why Bitcoin, and Bitcoin specifically, is good for America. How, we'll try to get into the how, the United States can adopt pro-Bitcoin policies. So obviously the SBR is sort of front and center, but it's not the only thing, right? There's lots of things that the government can do to make good on its pro-Bitcoin rhetoric. And we want to turn the rhetoric into action and to provide kind of a unity of purpose and voice across the industry that says this is actually a priority, and it aligns strategically with the U.S. government. And so we're going to be hosting that event. We hope to get a lot of interest on the presentations, the fireside chat. So Michael Saylor is going to speak. Vivek's going to speak. We're going to have a number of really, really important voices come and articulate their vision for Bitcoin in America. So stay tuned for that. And then we'll be that will just ramp right into our major annual summit, which is going to be in June, which is a much larger event. We're going to bring a lot more people into DC to, again, kind of keep pushing action, right? We're in the stage of Bitcoin's, was on the defensive the last 4 years. We had to make the case to policymakers that we're a serious thing. We're not a bad thing. And it was mostly trying to like hold the line. Now we're in this position of, okay, what does good Bitcoin policy look like? Tactically and tangibly and practically, how does that get executed and implemented soon? So that's our focus this year.
Now, when I was preparing for our interview this morning and talking with my family over breakfast, I told them a little bit about your background, and my daughter said, I have to ask, are aliens real, Matt?
The technical term is non-human intelligence. And yes, as I mentioned earlier, we're in an age of disruption where a lot of these what if low probability scenarios have to be considered seriously. And just like Bitcoin has gone under this evolution of being kind of this fringe, somewhat taboo, heterodox topic with its own in-group culture, influencer network, conferences, the UFO topic has undergone a very similar, if not even accelerated evolution, where it has gone from the fringes, gone from the taboo, and is now a subject of extreme seriousness by national leadership in our country and around the world. But because of its nature, is kind of not acknowledged as such overtly. And so we're in this particular limbo spot where if you are paying attention, or if you happen to have close trusted relationships with relevant individuals, you are acutely aware of how real and how serious the subject is. And it's a matter of the government and the governments of the world trying to get themselves postured for such broad diffusion of this information. So it will have implications, as we mentioned, with technology shocks, geopolitical shocks, monetary shocks. What's your UAP hedge? I think Bitcoin's probably the best thing you got. I don't anticipate it's not an alien invasion scenario. This is the end of the world. This is, there's lots of Hollywood tropes that have been implanted in our minds that become our main cultural reference for this topic. And I think many of those are useful as anchor points. I think they contain germs of this topic in a truthful way, but many also distractions and distortions and intentional manipulations about the nature of this subject. So this is, I would just put this as one of those things that's going to be coming in from outside the Overton window. This sort of, what is that? That's weird. That's not something I would take seriously before. And then it's something that more and more folks are going to have to incrementally take more seriously and incorporate into their mental models. And then their assessments of the future discount rate, right? The future structure of the political system and the relationship between citizen and the state. These are enormous questions. The government is not typically the right entity to answer. So it remains to be seen. I mean, this is a multi-hour question we could go into. I would just instruct your readers who I think are more hard-nosed financial analysts and practitioners and folks that want to always think about the future, right? You want to understand risk. You want to understand what assets are going to go up or down. You understand these political changes, these geopolitical changes. And I think any prudent analyst who wants to try to look at the future in a 5-10 year horizon that doesn't incorporate this subject into their models in some fashion, has a take on it, or at least hasn't investigated it seriously, is going to be in for potential strategic surprise, maybe sooner than that. And so I am in this weird position where I have the ear of a number of individuals, and my ear is also connected to the voice of individuals that have very close information on the subject, and I can no longer ignore it. I can't sort of safely compartmentalize it in this sort of the weird bucket. It is now a very serious issue that I take as seriously as I take my analysis of Ukraine, Russia, as I take my analysis of China, US trade. Like, for me, this subject is sort of the dark matter around which all these more visible developments that we see on our feed and our headlines are moving. And even these larger geoeconomic shifts, right? I think it's not disconnected, the major geopolitical shifts we're seeing coming out of the White House in regards to Russia and China, and even the articulation that, hey guys, maybe we should jointly reduce our military budgets by 50%, and maybe we should denuclearize, and maybe we should settle all of our global conflicts all at once. And maybe we should at the same time think about re-architecting the global economic system and the global monetary system. And maybe it might be an interesting idea to bring some more hard assets into the mix. And maybe, so there's a lot of changes, things that, people would not have anticipated. It's not happening in a vacuum, I think. And I think this topic is relevant to that.
It's a great cliffhanger for our next conversation. Matt Pines, Bitcoin Policy Institute, thank you for sharing your expertise in this masterclass on the strategic necessity for the United States to own Bitcoin. Please tell people where they can find your work and information about BPI's ongoing efforts.
Thanks for having me, and really appreciate the conversation. Hopefully we can do another one soon. So I am the executive director at Bitcoin Policy Institute. You can find us at btcpolicy.org. My X account is at Matthew_Pines. Follow us, follow our work. Stay tuned for the live stream link for folks to watch the panel presentations and fireside chats. I think some of them will be very interesting. Next Tuesday, we'll have some interesting announcements from members of Congress and senators. And hopefully we'll be doing more like that this year. So please support our work, follow us, and if you want to get engaged, please reach out.
Thanks, Matt, and we'll catch you guys next time.